Well, good evening, ladies and gentlemen, and thank you for being with me today. It's good afternoon to our friends across the ditch in the land of the long white cloud, and good morning to our compatriots on the east coast of Australia. And Mickey D's with us today. Thank you, Mick. I was about to ask the question. The perfect day in southeast Queensland. Absolutely. Absolutely wonderful. Great to have you with us. And welcome to all our other friends. We've got a particularly good roll-up today, which is fantastic, and I have much to tell you. So let's just briefly, Albert's with us. He's a tutorial guy. Says Colin, says Daniel over in New Zealand. David's with us, who is not David. He's someone else. The way he calls himself that. George is with us, of course. Graham's with us. More of that. Good to have you with us, mate, down in Melbourne. Joe's with us. Keith is with us. Good to have you with us, mate. Louis, of course. Mark and the other Mark, there's two of them. They're both absolutely keen Danielcode guys. They're both tutorial graduates. Wonderful to have you with us, fellas. And Mickey D, of course, Murph, there wouldn't be a party without Murph, Norbert up in the really cold country in Canada, Peter Mack, who, as I tell you, was not a day trader, Rob H in New Zealand, who's a long-time trader, very, very knowledgeable guy on markets, Rolf down in Melbourne, glad to have you with us, my friend, Trevor, and many others. Glad to have all of you with us. Okay, so we have a whole lot for me to talk to you about today. Some of you will know some of this stuff. A few of you may know most of it. A very few of you, and Mickey D is one of them, have spent considerable parts of your life thinking about the Danielcode, what it means, its other uses, and that's all to the good. Because it's that knowledge that empowers you with everything you do. So let's get moving on this. And remember that the Danielcode is telling us that markets are rational, orderly, and sometimes predictable. And the business of trading, folks, is making money. I'm going to show you a lot of stuff today that's really, really interesting. In fact, more than interesting, let's try amazing. Let's try knock your socks off. But remember, the business of trading is the business of making money. So everything that you see today and everything you see always at these Danielcode webinars is how to improve your trading, how to find additional opportunities, and follow the Danielcode, and you're right up there amongst the very, very elite traders. So this is a story about Daniel. He's a character in a nation document, and it's about a specific event. It's a story about a visitor, an unexpected visitor, his associates, and a scribe. And Daniel, of course, is the scribe. He's told to write this stuff down and preserve it. And he does that. And this all takes place many centuries ago. Daniel, we believe, lived about 500 BC, so that's 2,500, maybe a little bit more than that, years ago. And its preservation, how this story, which initially would have been written on papyrus, which is a pretty fragile material, how that's managed to endure over the millennia, over 2,500 years. That's the first of many miracles that's allowed us to know about it today. And that's in itself is a treasure. So this story covers just a part of a much bigger story. It covers about 50 years of Daniel's life. He was a prolific writer, it's quite short, unlike many of the other parts written by Daniel. This is just 15 lines. And it makes distinctions between the wicked and the wise, and only the wise shall understand. So I hope you're wise, because I want you to understand this, and it's essential that you do. So We know roughly the time Daniel was alive. We know that this in its original form was written on a piece of papyrus, and that over the centuries it's been transcribed and copied faithfully with a very, very precise method of copying that gives us enormous faith that what we're reading is actually completely accurate. So we don't know much about Daniel personally, but we know he was a good-looking guy in his youth. He described himself as a vegan, and for the whole of the purposes of this story and the other writings by Daniel, he was a captive of war. He was a Jewish youth, and he was captured by the Persians, specifically the Chaldeans, and then that morphed later to become the Medes. It was a tribal society, and he was taken from his home and his family and everything he knew and placed in a totally different environment. And he must have been an extraordinary person, because from that background of being an alien, a Jew, and in effect a slave, completely at the control of his captors as a captive of war, but he rises to become one of the most important people in the Persian Empire. He becomes the governor of Babylon, the biggest province in the Babylonian Empire, which was quite a thing in its day. Really, truly comparable with the Roman Empire, which comes later. So this visitor tells Daniel of all sorts of things, some that have already happened, some that haven't. But most importantly, he tells Daniel to write down his words and preserve them. And that's how it comes to us. That's why we still have access to this story. And strangely, the story that the visitor relates to Daniel is about time. And one wonders why it's about time. What was the relevance of that? In fact, you'll find a whole lot of questions, some of which I'll pose for you. But you need to question this stuff, and you need to come to answers, at least in your own mind, so far as is possible. So the visitor recites to Daniel two vitally important time periods, and it sets out the sequence of how time advances now. So why is this of vital importance to you? Daniel's story is actually about you, your family, your friends, and in fact everyone you know now or in the future. It is in fact about all the events in your life. And I suspect our every action and reaction is bound by what I believe is universal law. And you'll see that as I show you the code hidden in Daniel's writings in this particular story, that in reality it's about you. You are part of it. You are part of what you're going to see as we go forward. And it's what you and others like you do and have done that provides the vital proof of what I'm telling you. So the whole of Daniel's hidden code is contained in just the 15 lines of this written story. It's quite different. It's strikingly different to most of the other stories that Daniel recorded or wrote. It's really an out-of-sequence, stand-alone piece of writing. And I can think of many reasons why the secrets in this story were hidden in plain sight, which they were. And this particular story, written by Daniel, then preserved by many others, if its hidden meaning had been understood around Daniel's lifetime, it would have caused an uproar. As I have said, he was technically a slave, although he rose to high office and became a person of great prominence. But off with your head was something that, if you displeased the Persian kings, was a not unusual occurrence. And there are some instances where some of the phrases in this story are also used in other parts of Daniel's writing. But essentially, these 15 lines are a standalone description of a very specific event. And on the face of it, as you read it, there's nothing that's so powerful that's going to draw you in. But it's the hidden meaning, which I'm going to explain to you, which is so powerful, and it's working for you every day of your life. It's working for your family and your friends every day of your lives. So this is the story itself is no secret. In fact, it's contained in the most read book in our history. More people have read this book than any other. Millions, billions of people have read all or part of this book. But nobody's ever grasped the meaning of the embedded code, which I'll show you. And it controls all financial markets in all time frames. Now, that's an extraordinary statement. And I'm an attorney. I'm not a young attorney, but because of my training and background, I'm certainly not prone to making wild statements. I'm certainly not prone to asserting things that can't be proven to a high standard. So you can take this stuff seriously because it's been incredibly serious to me. It's been my life for the best part of 30 years. There's a large part of my life invested in everything that I'm showing you. In the process of this, because I'm a person who is inquisitive, I've read a whole lot of discourse, some of it religious, other not so religious, about Daniel's writings. But what I've read from others is totally at odds with what I think and will prove to you is its hidden message. So, but I understand the words can and do have different meanings to different folks. I don't wish to disparage anyone who hasn't got what I got. I understand that what I've got from the book of Daniel is a rare gift and a precious gift, as you'll see. So, as I've said, I'm an attorney by profession, and I've had the normal lawyer's training in the interpretation of words in legislation, statutes, judicial rulings, precedents. In fact, lawyers spend a good part of their life trying to interpret the meaning and consequences of words written or spoken by others, all of which in itself is preserved in statutes, court cases, etc. And the evidence adduced over long periods of time, transcripts are available to huge parts of the law. And our legal system, the Western world legal system, with the exception of France, which is based on the Napoleonic Code, and I should say New Orleans, which is also based on the Napoleonic Code for historic reasons. It's all very similar. The essence of it's very similar, and the bulk of our law comes from the old chancery courts of the United Kingdom, Britain. And there were concepts of fairness, concepts of equity, and that's how the law has developed over many decades, indeed centuries. But the basic lesson on legal interpretation is that words are to be ascribed their usual meaning, and eventually this developed to become the phrase, the test was that of the man on the Clapham omnibus. In other words, how would the ordinary man, the guy on the street, how would he perceive the meaning of these words? So it's all very sensible stuff. Indeed it is. And you'll see that as we go. So Daniel's 15-line monologue gives us two numbers, and they're both measures of time. He's specifically talking about time in these 15 lines. And these two particular numbers have references to Jewish history, and they're the two numbers spoken by the visitor. Now, I'm not Jewish, and I have no particular knowledge of Jewish history other than what you get in a life lived many years and from what you read and understand. But these two numbers excited me because I guess being an attorney, I was very suspicious of, and continue to be always suspicious, about anything that's based on words and understanding of the meaning of words, because particularly if you've been a lawyer for any part of your life, you'll understand that words have very different meanings to different people. That's why the law courts are full of contract disputes, divorce settlements. All this sort of stuff is based on the basic concept that two people can read the same words or hear the same conversation, but derive totally different meanings from it. Numbers are different. Numbers are the same in any language. 5 camels is always 1 more than 4 and 1 less than 6. And it never alters. In any language, in any culture, numbers are the same and they are precise. So when I started my search for knowledge 30 years ago, particularly knowledge of financial markets, I wanted to work with numbers. I had some faith in that. I had no faith in sequences based on time or any derivative thereof, words I should say, or any derivative thereof. But the 1290 days and the 1335 days, of themselves, the numbers appear quite innocuous. They've got a whole lot of exciting reasons for other people, a particularly segment of people, but that's not me, and that's not what I'm talking to you about. But this basis of it being time, once we apply some basic math to those numbers and the 15 lines, we can calculate what is time in the concept of Daniel's story. And he specifically told the sequence of time and how it advances. That is, the visitor tells Daniel how the sequence works. And he states it shall be for time, a time, times, and an half. And that might sound really simple to you, but once you've calculated, as I have, the real meaning of time, then simply the progression goes on that the next number is time and an half, the next sequence is times, plural, the next sequence is times and an half, the next sequence is 3 times, etc., etc. It's very, very simple if you simply just take the basic understood meaning of the words. That is what the man on the Clapham omnibus would understand from it. And I don't claim any more knowledge than that. I love mathematics, but I'm not a particularly brilliant mathematician. I know the basics and what I was taught, and that's about it. But once we start running the mathematical calculations through Daniel's hidden code, and it's indeed his secret code, the first set of numbers that jump out at us are the rule of 8s. Now, the rule of 8s has been an important part in financial markets since the US stock market started. Stocks and commodities were routinely quoted in 8s before decimalisation took over. And some, particularly the good old CBOT brokers who were unhappy about the merger with the CME, ensured that modern markets are still quoted in 8s. Grains and US T-bonds, for example, are all quoted in 8s or derivatives thereof. So W.D. Gann was a great admirer of the rule of 8s, and some modern trade platforms are totally based on the rule of 8s. But until now, nobody knew its origin. Now you do. It comes straight from the page of Daniel's short story 2,500 years ago. It's a big thing, isn't it? And of course, Mickey D, who's one of the very few, who's really spent a considerable part of his life thinking about what I'm telling you, has just sent me a little note saying, if this is true, what we're talking about, what else could be true? And I'll give you the rest of that detail nearer the end. I don't want to preempt it. But this has been a story that's evolved over time. So the first 2 levels in the time sequence, remember, in this particular story that I'm telling you, time is specified by numbers and they're declared to be days, so we know what we're talking about. And the first two levels in the time sequence are 37.5 and 62.5. The second number, that's an alternate to one of the proper Danielcode numbers. It does not generally appear on the Danielcode sequence, but the tool that creates the red and black lines, which are retracement levels in price and functional sectors in time, that will list 62.5 as an alternate to the nearest true Danielcode number, which is 59.3. The next level to emerge from those 15 lines are the 6 levels that create the time sequence as spoken by the visitor and recorded by Daniel our scribe. And combined, all those numbers combined, create Daniel's secret and long hidden code. And the math goes on to provide proof of concept and to create the minor time sequence, which we use in all market analysis. Now, while I'm talking about math, I can feel the vibration as a whole lot of you are saying, yuck, math, I hate math. I'm not very good at math. I don't like it. Well, don't worry, because I'm talking to you about how I found the concept. Having found it, we do all the math for you. We convert these major issues that we're talking about to time and price, and we create them for you at the Danielcode. And of course, the Danielcode.com, our website, is dedicated to the revelations, is the best word, that have come from this little 15-line story. Colin, can I explain the rule of eights? Yes, I can. Let me leave that for the moment, and I'll get to that at the end, if I may, Colin. So, proof of concept. People make all sorts of statements, and a whole lot of the time it's rubbish, particularly in our modern world with social media. I hope you don't think that I'm a person prone to making statements without proof of them. But as a person with zero technical skills, I proved this concept with laborious spreadsheets. I mean, huge spreadsheets, all created by hand. They were so big, they had to be unrolled on the sitting room floor. They were in A4 size. Was it A4? It's huge, huge size anyway, and all stuck together with sticky tape. And I didn't just do that for these numbers. I did that research for every number in the two books that took my interest at the time. And we're talking about 7 years of work of, something like 100 hours a week. None of this has been easy. And at some stage, many years ago, I ran downstairs in the house where we were living and said to my wife, I found it. This is the silver key. This is the key to all financial markets. And of course, it wasn't. What it was the start of a thread. And you know what happens with a thread is you pull on it, you get more thread and other threads and lots of threads. And that's been this whole journey of discovery that took me years and years and is still continuing today. For those real Gnostics who are deeply imbued with the Danielcode, as is Mickey D, when we meet, which is very occasionally, we talk about the Danielcode. We talk about the other things that it's shown, the other knowledge that it's brought to us. But as I was going through this journey, and it was a journey, at some stage I realized I may have been simply playing with numbers, and I needed some external validation. The first question, of course, is why did I think that these particular numbers would have any reference or relevance to financial markets? This is a book, a story, that was written about 2,500 years ago. There was no concept then, and for centuries afterwards, of formal markets and the recording of those markets. So why would these time sequences have anything to do with financial markets. I always believed they would, but I've made sure that I wasn't taking any biased view of that. The numbers themselves, because we're only dealing with numbers, 2 and 2 is 4 in any language, and it can't be anything different. But as part of this search for some validation, I was looking for something that the numbers I was creating, when I applied a bit of math to these numbers, I was looking for some external validation, and I found it. And the first was that these numbers I was running, these sequences of time, they eventually, a dominant one came to 365.37 days, which you'll instantly recognize. It's very, very close to a calendar year. And the next number was 29.666 repeater. And that's days, and that itself is time. But it's more than that. It's also almost exactly the length of a synodic month. And you can look that up in Wikipedia, tell you all about it. So this discovery was explosive to me. I'd been mired in these endless spreadsheets, all sorts of numbers, derivatives, compounds, sequences. I did just about everything to the numbers that you could think of. And then these numbers jumped out. And the actual length of a modern calendar year is 365.24 days. Now, before we get too smug about this, remember that it wasn't until the first atomic clock was installed in Paris in 1954, as I recall, that we actually knew ourselves, modern people, what was the actual length of a calendar year. So this data that comes from Daniel's writing, and it comes purely from what he's recorded, that gives you a length of time that is accurate to what we now know is the exact length of a calendar year, with a variation of about 3 hours a year. So that variance is less than 49 seconds a day. And this from something written 2,500 years ago. How could that be? I mean, these people lived in cities. Most of them lived in tents. I mean, if you put Mick and I out in the middle of a paddock for a year and asked us to tell you how long the calendar year was, I mean, we're both educated men, we wouldn't have a clue, wouldn't know where to start. So this is really, really staggering stuff. Our second derivative from the basic math gives us a calculation of 29.666 repeater days. This is almost exactly the length of a synodic month. A synodic month is the average length of a calendar month. And today, scientifically, we know that that is 29.53 days. And in fact, you can take these numbers out to 6 or 7 decimal points. I haven't done that because the decimal points that keep coming up in all the calculations are immaterial because of the gaps in the trading data. And that's caused by the fact that financial markets largely trade 5 days a week. They have certain holidays off, and because of that, 29.66, if you call it 29, it works just as well as rounding up the decimal and calling it 27. And that's 29, I should say, from 29.6 to 30 is what I'm trying to tell you. Do excuse me. I've got this new wonderful program that is displaying the next sheet to me as well, so I got confused. But the decimal points are largely irrelevant because these signals that are created by these time cycles are valid to plus or minus 1 period, which actually means it's accurate for 2 days. It's much more accurate than that, but they're the outliers of the calculation. So extraordinary stuff, isn't it? So lots of questions from the proof of concept that you should be thinking about and you should be asking. The first one is, if we identify the source of Daniel's information, many of you will think that source is infallible. If so, why are there any variances at all, no matter how small? Someone who could define a calendar year 2,500 years ago within 3 hours a year discrepancy between actual and that which was posited, that's extraordinary. But if the information was really infallible, there shouldn't be any variance at all, should there? So the next question that follows is, how is it possible that a time series written 2,500 years ago could be so incredibly accurate? Remember, we're talking of an era of water clocks, molded candles as timekeepers. They knew that a candle of a certain thickness and a certain composition would burn at roughly this rate. But the answer to question one is actually obvious, and I think simply staggering. We know, and we have a formula for the rate of decay in the speed of spin of a spherical object in a vacuum. That's what Earth is. It's a spherical object spinning in a vacuum. And we know what the rate of decay of the speed of the spin is. In other words, you can calculate this. And if you then take the inverse and keep turning the clock back until the variance is 0, what will you have? Well, think about it, because it's truly staggering, like everything else to do with Daniel's secret code. Let's move this on to charts, because time moves on and I only have a limited time with you. But do stay the course. You'll be more amazed at the end of this than you are even now. So this is a future chart. This is the S&P E-mini daily bars, and each bar records the high and low that the market traded to. Each of these bars has a little dash on the left. That's where the market opened on that day. That's the price at which it opened. The little dash on the right is the design that shows the close of the market for that day. I'm using the S&P E-mini contract because it's the most liquid of the futures contracts, and its turnover is massive. The S&P itself provides us an index, and basically what it is that any one of these points is that the total price of the 500 stocks that are in the S&P 500 index. You can read all about that. It's not terribly material for what we do, but the index is the actual price that all those stocks were at that moment, added together and divided by the number. But some of them, there's some tricks in them. Some of these indices, and I'm talking about the Dow, the Russell, NASDAQ, S&P, and Germany's DAX interest, some of them are capital weighted. In other words, when you look, for example, at the NASDAQ, the big bangers provide a vastly disproportionate share of the price action. Or you can take the other view and say it's a proportionate share because the markets are so much, some of these markets, these individual stocks are so much bigger than the average stock that they should and do provide a different volume of activity to the market. So this is from S&P Dow Jones indices, and you can read through this. It's just telling you that the S&P 500, it's the most commonly quoted index relating to stock prices. And it tells you here how it's prepared. You can read more detail at S&P Dow Indices, but it is huge. It is massive. There are millions upon millions of people trading this index or its derivatives, futures, ETFs, options, what have you, millions upon millions trading it every single day. It is the biggest single market that I know of, with the exception of some of the Forex markets that themselves are giant as well. But this is gargantuan. This is the Godzilla of stock market indices, if you like. And what I'm saying to you appears on its face to be totally preposterous. How can something that some bloke in New Zealand at the time worked out from Daniel's 15-line story, how can that control this, the biggest index of financial markets in the world? Huh? And it does. And it does much more than you realize. And I suspect this will be a surprise even to the cognoscenti, those like Mick, who spent large parts of every day thinking about why is it so. And of course, that's a valid question. So this chart you're looking at now, this is the S&P index. And this is every number on the chart has a known level of time, the date, and a level of price. And it's represented by the movements in the price of those 500 stocks that are included by S&P in the index. Now, futures trading and spot forex are as near net zero activities as we can expect. And I don't mean you're making net zero. If you're with the Danielcode, you should be making a whole lot of money and all the time. But net zero in terms that for every buyer there is a seller and vice versa. So if there's always the same number of buyers and sellers, how do markets move? Well, markets go up when there is more urgency in the buying. The number of buyers and sellers is always equal in all of these markets. That's why you get the silly commentary from the gold bugs. They don't stop to think time that there's always a seller on the other side of the buyer and vice versa. But usually one side or the other, buyers or sellers, are more motivated. Buyers, if they're more anxious, they're prepared to chase the offer. The market goes up. Vice versa. If the sellers are more anxious, they're more determined. They're chasing the orders down. The market itself will go down. And all markets are the sum of the emotional energy expended by the various participants. Now, you won't believe that, so I ask you to just hold that statement in your mind until we get to the end of this presentation. In addition to futures and forex, futures, what we're talking about now, and indices, there are a plethora of ETFs and mutual funds tracking the S&P 500. Dow Jones Indices has a spiel on all of them, and it's amazing. The enterprising spirit for folks inventing something new from something old is quite extraordinary, and it's wonderful. It's just massive. So since the website went public, which was late 2008, I've been preparing and posting members' charts, and those members' charts at the moment cover 9 Forex markets, 11 futures markets, and these are updated twice weekly, more often if required. And in addition to that, I also cover a pretty large number of the other markets. So there's about 15 futures markets and about the same Forex markets that I cover. And all of this work that I'm doing is creating signals, trading signals, buy signals and sell signals. And you get those in the various packages at the Danielcode website. But these members' charts are automatically posted under our Chart Archive tab. 30 days after they're released to members, they go straight into our Chart Archive tab. And you should have a look at that. There are now over 40,000 Danielcode members charts, all showing that markets turn at the Danielcode numbers. I can go further and say markets turn at and only at the Danielcode numbers. And this is proof of concept. So this is a final filter to refine all of your trading. Even if you're an established trader and you're happy with your existing trading system, add this filter to it, that markets will turn at and only at the Danielcode numbers. You'll find it's quite extraordinary. So there are two sets of Daniel's code numbers. There are the red and black numbers, which are proportions of previous ranges. And you can see them on the chart on the left, which is soybeans. And on the right, we're showing what the blue lines do to markets. In fact, on soybeans, you can see what the blue line did today, where that market was roaring down, hit the blue line around about 13.16, 13.17. That was it. That's all she wrote. It reversed like it had been shot and roared up. I'm not sure if that's today's bar or not. Maybe that was yesterday's bar. I do this work for you folks starting at 4 o'clock in the morning, which is 1 p.m. market time in the US. So sometimes I'm using a chart that's got the current day's activity on it, and at other times I haven't. But it's telling you the same thing. If you look at the chart on the right with the US dollar index, you can see what caused that turn there. The blue line stopped 2 consecutive bars, and look at the highs on those bars. They're not sort of at the blue line number, they're exactly at the blue line number. And that's what we call target recognition. And that's what we require before we can commit to a trade. So let's recap why this stuff's so important. We're talking about a series of ratios or levels that split time into its component parts. We're using a progression of time first recorded 2,500 years ago. I mean, this is ancient stuff. Why would an ancient discourse on time have anything to do with modern financial markets? There just doesn't seem any nexus at all, does there? And the only way of testing that proposition is taking those levels of time, which record on the x-axis, and also price, which is the y-axis, and putting it on a chart and seeing what it does. And this is exactly what I've been doing at the Danielcode website since late 2008, and for many, many years for my own private purposes before that. And how do we even get to price? Well, time and price are the same thing on different axes. You've heard me say that before. This is the proof of it. In fact, every time you look at a member's chart, you're seeing the proof that time and price are the same thing on different axes. We take the time ratios that we get from Daniel's 15-line story, and we use those exact same ratios as price. And that, when I made that discovery, was a huge discovery. And the fact, as I tell you, there are over 40,000 members' charts at the chart archives of the Danielcode website, that is proof of concept. So what power could possibly ensure that markets track Daniel's code? Something that market players have never heard of. Hardly anybody in global terms has ever heard of Daniel's code. The number of people who have some understanding about it from our website, www.thedanielcode.com, is minuscule in the scheme of things. And I've already touched on it, but time ratios themselves create price levels in financial markets. Extraordinary stuff, isn't it? What are you smoking, someone says. I've actually given up smoking thanks to Mickey D. But, do excuse me. So, here's the next blockbuster. Markets are continuously talking to you. That word should be trying to talk to you or talking to you. I've got a little error up there. Forgive me. That was probably done at 2 o'clock in the morning. Who knows? But markets are continually trying to talk to you. This is a completely outrageous proposition. as are the related propositions I've told you, that markets turn at and only at the Danielcode numbers, and that all markets are ruled by the Danielcode. Absurd stuff, isn't it? But it's true. So what markets are saying is, I know these secret Danielcode numbers and I am tracking them. The problem has been that until I found the Danielcode, which creates the market time and price levels, we simply didn't have the language to talk to markets. Now we do. If you think this stuff is silly, pay attention, because this stuff is vital. We call these red and blue lines on Danielcode charts, which I create, we call them targets. And market behavior, as it finds these numbers, is very, very specific. It's not just about got there. It's got to get there with a variance of less than 0.1%. Not 1%, 0.1%. 1/10 of 1%. In reality, that variance, or the allowable variance at 0.1%, it changes as market prices go up and down. When I started talking about this stuff many years ago in gold, the number was much, much less than it is today. But as the number of the value of that has increased, of the product has increased, so the allowable variance has increased. In some cases, massively. But it's actually still, markets are still sticking to, that handful or a handful and a half of ticks in the accuracy of that variance. And we see that every day. It's there in the members' chart. You just got to look at it. And it's enormous stuff. So the number of levels on the chart starts off as being really small. There are just 5 DC retracements. There's one level and a substitute level and half, which is part of the progression. So as the new move continues, the market's own action creates the DC blue lines. So every time we get a new trend, we're looking to measure the legs down into, let us say, the low of that trend, or the legs up into the high of that trend. And we then use the Danielcode red and black lines as retracements. Now, these can't be altered. They're in a tool that we provide to you. It's called the Danielcode retracement levels, and it expands and contracts depending on the piece of the market that it's measuring. But it's always constant. It's always the same ratios. They never change. As the market moves out of those retracements and starts creating new price levels, the market's own actions create the Danielcode blue lines, which you also see on members' charts. In a really long trend, these blue lines multiply as every swing creates new numbers. So you can finish up with a whole lot of blue lines on your chart. Some people say, there's always a narc in the house somewhere. Oh, well, he puts on so many numbers, he's got to hit on one of them. That's not true, and it's certainly not the point. It's not the time and price levels that themselves create signals, but what and how markets react to these DC numbers. Market behavior of these numbers is highly specific to create target recognition. We can get target recognition at a bar high-low or on the close, and these time and price signals often come early. They often come early because I've designed it that way. There's absolutely no point in signals coming late. And these signals are usually valid for 2 days. But have a look at this chart here. This is a section of gold back in 2014, 2015 that I used to describe this phenomenon to people who are doing Danielcode tutorials and learning for themselves how they can do everything that I do, create their own price signals, create their own time signals, etc. Have a look at this. This starts off with the big bar up, and that gave us a sell signal at the high of that bar. That signal was elected below the inside bar the day that came next. Down it went. Have a look at that first pretty big bar down. It stops right at the 1127.1 Danielcode retracement level. What's the variance? A handful of ticks. That's the market's way of saying to you, I know these Danielcode numbers and I am tracking them. What happens with the next bar? Down it goes. The low gives us nothing, but look at the close. The market closes almost at the same level, 1127.1 plus or minus a handful of ticks. This is the market's way of saying, I know these numbers and I'm tracking them. Look at the next bar that goes down. It goes through that numbers and the two next numbers, and it gives us no target recognition. That happens about every second day. You get target recognition every second or third day on average. Then you get, and these have been big bars down if you look at them, this has been a period of considerable volatility. Big bars up, big bars down. All of a sudden it puts in this tiny little bar right at the, well, almost at the end of the push down. And its close is within a handful of ticks of 1112.8, 9 ticks variance. We allow 11 ticks variance when the number was at that level all those years ago. And that little bar is there for one purpose and one purpose only. It's the market's way of saying to you, oops, sorry, I missed the levels with the previous bar. I'm telling you now that I know these levels and I'm tracking them. And it's that small bar there that sets up the buy signal for the next day. And what happens the next day? The market opens pretty much on top of the 1112.8 Danielcode number, roars down. This has been a high momentum move. Everyone except us think this is going to the end of the earth. Look what happens. It hits the 1104.2 black line. The Danielcode black line's a little bit different to the other red lines in there. It is the last level of support and resistance for any market swing. This market hits that black line, stops like it's been shot, roars up with a huge outside bar, electing the buy that's been set up by the previous bar as it goes, and it gives us about 2,200 in the next 3 days, simply for knowing where to put our stops and understanding the Danielcode signals. Good stuff, isn't it? Keep watching. Let's look at some examples from today. This is CAD Chief today. This is the Forex pair. Yesterday you had the funny outside bar. It was pretty weird. Up it went into the Danielcode red line, 75.88, not far off it. That caused a sell today. Have a look at this. This is Euro USD. We had target recognition on this 4 days ago. Then you had to push through the 100696 number, and we had a funny little bar trying to work out what it was doing, didn't know really. Then it had an outside bar, still trying to work out where it should be, this market. And then we got today's bar. Have a look at where it closed. Remember, target recognition is valid at a bar high low or on the close. Well, the low's not bad. It's pretty close to that 99,482 number. But look at the close. There are two Danielcode blue lines there. One of them is 1.00170. The other is 1.00202. If you add those together and divide them by 2 to get the average, you'll find that that average, or where that market actually closed today, was, let me see, 100187. The average of those two bars is 100186. 1 tick variance. Extraordinary, isn't it? Big volume bar today. Plenty of price action. Roared down. Okay. Lots and lots of options around the $1 mark. The pundits have been talking about that for days and days. There you are. Despite all of that, market closed right at its Danielcode numbers. This is the New Zealand US dollar Forex pair. Yesterday gave us target recognition. Okay, the low of yesterday was 6081. Okay, what was the number? The blue line number? 6082, 1 tick variance. How often does this happen? All the time. All the time. Okay, what happened today? The low today, 6061. Where's the number? 6058. 3 ticks variance. 3 ticks in a big bar. This happens all the time. This is oil. Same thing. Been struggling to find a low. Been trying to find a base. It can't do that unless it finds a Danielcode number. And today's low in crude oil was 90.56. Where's the Danielcode number? 90.43. 13 ticks variance. Nothing. It's not even the width of a hair. How about this one? This is the S&P. Today, same, looked very much like the last chart, didn't it? Roared down, found support. There's the Danielcode black line, 3721.5. Where did we get to today on this market? The low of this market today? 3723.75. Couple of points. That's all. How does it do it? This is gold. Gold has been in a complete flummox for days and days and days. Today, it's trying to find a low. What happened in this price action in gold? The low today, 1705 point, that's the close, the low 1695.0. Where's our Danielcode blue line? 1695.7. 7 ticks variance. That's it. We allow 16 ticks variance at this particular number in gold. Look where it closed. Didn't have to do that, but it did. 1705.8. Where's the blue line? 1707.2, a couple of points above it. I know these numbers and I am tracking them. That is what this market is saying to you. Here's soybeans. It had tried to find a low yesterday, stumbled a little bit through the blue line. Today, it's its way of saying sorry. It's put its low in today, right at the blue line and the black line with it. The low is 1317, correct 6. Those little numbers after the arrowhead are called corrects, and they are in 8s. In fact, there are 2 8s. Tick value in this market is 2 8s. And this market goes correct 2, correct 4, correct 6, correct 0. Have a look at that low today. 1317, correct 6. Where's the numbers? 1317, correct 4 is the blue line. 1 tick variance from target. Markets are doing this all the time, every day. I will not bore you anymore with this other than show you the silver chart, which has been leading gold for many months now, as I've told you. Big volume day down, big breakdowns, had 6 or 7 days going sideways, trying to find some direction, trying to find something to grip onto. Look what it did today. Big down bar. Where's the low? 1801.0. Where's the Danielcode number on members charts? 800.5. Staggering. One tick variance. Now you can see these members charts, folks. You don't have to take it from me. You go and check them for yourselves. They're on the Danielcode website. If you're not already a member, sign up for a free trial and you'll have access to members charts. You'll be able to see this chart has been sitting on members charts now for, these numbers have been sitting there for some weeks, and that's exactly what happens all the time. Have a look at this. This is the crux of the proof. This is the S&P E-mini futures at the 2020 bear market low. This is a 6-day chart. When we have to use large pieces of data, we tend to use a 6-day chart, which is a Danielcode equivalent of a weekly chart, and we have other longer period of time that we use for our charts. But the 6-day is the basic. So this was, as you recall, who were trading at the time, in March 2020, a really inspiring flash crash. inspiring because we got short on the first day and we got long on the first day up. I think we got about $24,000 per one S&P mini contract out of this trade, because that's what all this is leading up to. We create trade signals for you from all of the stuff that Daniel has given to us. But have a look at that close. That was a highly dramatic move. It was the shortest bear market in history. It became a true bear market for a number of days. Look at the close. Just about right on top of the red line at 22.1250. And 22.1250 is one of the Danielcode retracement levels, 74.2. That's the retracement level. In that flash crash, which was panic stations everywhere, chums, look where it stopped at. Look where the close was. It's saying to you right there, I know this number and I'm tracking it. Let me take that a little bit further. This is the current correction, and the market has taken 2 bites at this correction. The first correction is it is correcting the minor swing. The high, this is the S&P E-mini. The high of this market, January the 4th this year, all the way back to September 24th, 2020. These are 6-day bars. So this market has moved in a year and a half. Look what it's done. Every one of those push downs has ended up at a Danielcode target. And I've put those targets on there for you. The first push down stops at the 37.5 target. The next push down stops at the 44.5 target. The next push down stops at the 59.3 target. The next push down flips through that and stops at the 62.5, which I told you was an alternate to the 59.3. In that range, the market almost always uses the 59.3 retracement. Occasionally, it's what I call the NFI number. It'll slip to, if market makers are really confused, they will always try and park the market at a Fibonacci number, because that's what they've been taught. It's not real and it doesn't work, but as you can see, or as a friend came to one of my tutorials said to me, was a New York broker, he said, the worst thing we've done for 40 years, we've been forcing people to learn Elliott wave theory. And he said, you've just proved it's rubbish. Anyway, you can see there with the bottom line of this is DC target recognition, how the market slipped through past the 59 and stopped at the 62. How accurate were all of those moves? This is a 6-day chart. They are accurate to a handful of ticks. But what about the low? What happened to the low? There's no signal there. There's no target recognition, was not exact enough to give us a signal. So what actually happened there? Well, have a look at it now. You can see from the January high back to the March 2020 flash crash low. I put a big blue circle around that. That's a very, very important feature of this chart. And it's actually what the market is correcting. So if you look at this now, you've got all of those target recognition signals that were on the last chart that was correcting the minor low, and to the right of those numbers, you've got the numbers from the major low. And you can see there's the low on the S&P E-mini, and on the 6-day chart, it's a handful of ticks away from the Danielcode number. The new Danielcode number that went in there on the correction of the larger swing was 3636. Okay. What was the actual low? Not sure if I've got the right chart there. This looks pretty good. The actual low, which came on June the 17th in this market, was 3639.0. 36390. Where's our Danielcode number? 36360. 3 points. Now, we allow 1.1, or I should say rather 0.1% variance from price to target on a daily chart. When you get to a 6-day chart, it's tempting to say you use 6 times that, but in fact you don't. You use 1 times 2 times 3 times 4 times 5 times 6, and you get a fairly big variance. We've got 3 variants. We've got a variance of 3 points out of 3,600 points. That's it. And you thought you were doing the trading. This market stopped exactly where the Danielcode support was, precisely within 3 points. There you are. That's the miracle of this stuff. Let's keep going. This is the Russell. This is another one of the indices we trade. I've been telling you for some time that the Russell is actually more accurate than the other equities. You can see the low back in March 2020. 70 days from that low, which is a Danielcode ratio, we got the high on November the 8th, 2021 on the 6-day chart. Look at its correction since then. First of all, straight down into target recognition, multi-week rally, breaks that support, goes to the next Danielcode number. Multi-week rally, breaks that support, goes to the next number. DC target recognition within a handful of ticks. That's what markets are doing. Who's done this? You've done this. What makes markets stop if they're going down? Well, you get a consensus from all of the players. No one wants to bid the price to offer lower. That's what makes the market stop going down. Same going up. It reaches a point when all of the players, remembering there's millions and millions of them, they all agree, without being aware of it, that they don't want to bid any higher. That's what caused market tops to come in. Here is the Dow. Have a look at this. Target recognition, 29925. That was the closing low of that bar down. This is still the 6-day chart, 4 weeks ago. The actual number was 29927.07. What's the Danielcode number there? 29925 against 29927. You're kidding me? 2 points variance in 7 months since the high. And more importantly, the market has to know the high and the low back in March 2020 to create these Danielcode price retracement levels. How is it possible that the market knows the highest high and the lowest low now, 2.5 years ago? The market has to remember that because it can't create the Danielcode retracements unless it knows those numbers. I hope you find this stuff has blown your mind. Let's see, we've got a little bit to get through. This is the Dow. We finished with that, so it's much stronger. So how does this all happen? Essentially, it's group psychology. When nobody wants to offer low, the low is in. When nobody wants to chase the bid, the high is in. Millions of people, think about it, millions and millions of people and entities trade the S&P index and futures and ETFs and warrants and options and mutual funds that track it. The bars on charts are measures of the group opinion at the time. And all of us, whether we know it or not, are trading to the levels created by Daniel's code. The secret levels, the hidden levels. Very few people know what they are. And that itself is a miracle, because markets are bound by the Danielcode. Okay, I'm sorry if I've gone a bit over time, folks. If you have gone over time, I'm having such a good time. I'm enjoying myself. I find this stuff so exciting. I can talk about it all day. Any of you ever come to a live tutorial when I get back to having them, a couple of large Bloody Marys, and I can talk as long as you like. It just amazes me. If you want to be a super trader, you want to be part of the elite, be able to do all the things I do at these webinars, I'm happy to teach you to do it. Just email me, jneedham@thedanielcode.com, jneedham@thedanielcode.com. I will be more than happy to explain it all to you. Remember, the business of trading in futures and forex is not to be right, although that is a consequence of it, but the business of trading is making money. If you haven't already, folks, please help yourself to a free trial of www.thedanielcode.com. You'll be able to see everything we do, and you'll find it very interesting. This is the disclaimer statement. I always want you to pay strict attention to this, because I promise you it's very, very easy to lose money if you don't know how to trade. And equally, it's very, very easy to make money once you're a seriously competent trader. So that's all I have for you today, but I've got a couple of questions here. Colin would like me to explain the rule of 8. Rob says, exciting indeed, John. Thanks. You know the following. Interesting. I want to know the secret ratio and know the human body ratio. Ratio the same. They are. Human body the same, yeah. And if you look at Rob, DNA, we had a young gentleman at a tutorial in Los Angeles who worked for the NASA Jet Laboratories. And he was involved in DNA sequencing, and he said 59.3 is the most powerful ratio in DNA sequencing. So what you say doesn't surprise me at all. Colin, we've run out of time. I will give an explanation, a full explanation of the rule of 8 at our next webinar, which will be in 2 weeks' time. I hope you can join me then. I trust you've enjoyed this, folks. I hope there's plenty of stuff for you to think about. Keep thinking. There are many different answers. Some of them are valid, others are not. Okay, I'm straight into the Bloody Mary for me. It's Friday afternoon here. My orders are on. I'm off the clock. Thanks for being with us, folks, and I look forward to seeing you again soon. Akshay, the toughest part of the journey, 7 years of spreadsheets. Akshay, I tested every number in that book and a couple of other books as well. Amazing stuff. Thank you, Rolf. Glad you enjoyed it. Enjoy your weekend, folks, and thank you for being with me. Bye-bye for now.